Happy Friday out there, folks. It's Darius Dale here to present our macro minute for Friday, April 1st, 2022. Happy April Fool's Day. Don't get fooled out there. Be careful. Starting with markets, stocks up, commodities down, crypto down, dollar up, global bond yields up. Big movers this morning. We have the MSCI Emerging Market Index up 2%. That's up around 2% week over week as well. 10-year and 30-year nominal treasury yields up 8 basis points this morning a piece to down 6 basis points week over week a piece. Big news, you had oil reverse an early decline this morning as Russia's Gazprom started telling its clients how to pay, started instructing them on how to pay for gas in rubles. Again, we talked about that earlier this week as a way for Russia to circumvent sanctions. We also had some news out of China as well with respect to this growing spat between U.S. regulators and Chinese regulators. But it looks like Beijing is prepared to give U.S. regulators full access to auditing reports for the majority of the 200 plus companies listed in New York. That's an acquiescence. It favors the sort of continued integration of the sort of financial supply chain, if you will, between U.S. and China. So at the margin, that ameliorates some of the issues we've seen from a geopolitical risk perspective. On the macro front, yesterday's February PCE data out of the U.S. economy contained fresh evidence of two key themes we've been discussing for the past few months. It also introduced a new theme that bears monitoring over the next few months. With respect to the former themes, the divergence between goods and services consumption remains a net drag on the growth rate of headline PCE, insomuch that the persistent decline in real incomes continues to lower the floor for domestic consumption capacity. With respect to the latter theme, we saw a noteworthy deceleration in the sequential momentum of core PCE and trimmed mean inflation that represents our first evidence of waning inflation momentum. The problem remains, however, that we are nowhere near the 2 to, let's call it 2.5% level required for a Fed pivot. So with respect to spending, we had headline PCE, that's overall aggregate consumer spending, which we know is roughly 2/3 of the U.S. economy. That slowed to 1.3% in February on a 3-month seasonally annualized rate of return. So that's the 3-month over 3-month annualized. Goods declined sort of minus 3.6% on a 3-month SAR basis. That's the lowest point we've seen since December. You had services accelerate to 4%, a positive 4% on a 3-month SAR basis. So that divergence is pretty wide there, as you can see. Real disposable personal income per capita, taking it to the chart. This is one of the charts we've been talking about for the past few months. What we're showing here on this top panel is just the sort of real level of disposable personal income per capita. Obviously, we're moving in the wrong direction to start. You typically want this line going up if you're in an expansion. But most importantly, the thing I'll call your attention to is here down at the bottom panel. We're talking about a minus 3.4% contraction on a 3-month SAR basis. We've been trending negative for a while now. And obviously, part of that is a function of just coming off this spiky peak with respect to fiscal stimulus. But the fact that we're now still trending lower is telling you that on a real basis, consumer incomes continue to be eaten away at by inflation. And as you can see, we're tracking at recessionary levels. And if we remain down here, obviously that's going to be a problem for the broader economy. We can already see that it's a problem in terms of the slowing growth rate of headline PCE. Shifting gears to inflation, we had headline PCE inflation accelerate to 7.2% on a month-on-month SAR basis. So we're looking for month-on-month SARs here on inflation because we think that's where all the action, the pin action is going to be in terms of the first couple of monthly prints. Core PCE that decelerated to a 4.3% month-on-month SAR. That was a positive development, the slowest print we've seen since September. But that's obviously that's more than double the Fed's preferred target, more than double. Then lastly, Dallas Fed's trim mean PCE inflation that also decelerated to 4% on a SAR basis, lowest point we've seen since August. But again, roughly double the Fed's target. With respect to today's probable range setups, finally got the neutral VAMS breakout in the S&P. We've been presaging on the program for roughly a week and a half, I guess. S&P 500 in its probable range has 5.2% of downside versus 1.3% of upside. WTI still neutral VAMS minus 9% of downside versus 20% of upside, so more than double there. Bloomberg Dollar Index minus 0.2% of downside versus 1.8% of upside. That's still bullish VAMS. 10-year Treasury yield still bullish VAMS minus 22 basis points of downside versus 24 basis points of upside. So a fair fight there. Bitcoin, a bullish VAMS still minus 6% of downside versus 9% of upside. So first day in a while where we have more upside than downside in the Bitcoin's probable range. Ethereum minus 9% of downside versus 8% of upside. That's still bullish VAMS as well. And then lastly, gold, neutral VAMS minus 3% of downside versus 4% of upside. So with that, Darius Dale presenting our macro minute for Friday, April 1st, 2022. Best of luck out there and have a great weekend.